IonQ versus Rigetti, which quantum computing stock should you invest in? When it comes to investing in the future of technology, the debate between IonQ, IonQ, and Rigetti, RGTI, is heating up. The world of quantum computing is on the brink of a revolution, and savvy investors are eager to know which stock holds the most promise for growth. Published on July 22, 2025, the landscape of quantum computing stocks has become increasingly dynamic, especially following Jensen Huang's optimistic shift regarding the timeline for this groundbreaking technology. While there is still a considerable amount of development needed before a wide array of quantum stocks, and potentially a few quantum IPOs, can achieve a transformative leap akin to NVIDIA's, NASDAQ, NVDA, remarkable ascent over the past decade, the excitement is palpable. IonQ and RGTI are two standout players in the quantum computing arena, gaining momentum and attention. Both companies have recently captured the interest of Wall Street, positioning themselves as potential frontrunners in the quantum race. Are you feeling confident about your retirement savings? If you're unsure, Smart Asset offers a free tool that can connect you with a financial advisor in just minutes. Each advisor is thoroughly vetted to ensure they prioritize your best interests. Don't hesitate, start your journey by clicking here. Following NVIDIA's much-anticipated Quantum Day, the timeline for when this incredibly complex technology will be ready for mainstream use remains uncertain. Some experts predict that quantum computing could make a significant impact within 15 months, while others argue that a 15-year horizon is more realistic. The unpredictability of emerging technologies makes it challenging to forecast their trajectories. Just think back to how few investors anticipated the transformative impact of ChatGPT and the AI boom during the COVID lockdowns just 4 years ago. Quantum stocks are once again gaining traction. While it's wise to manage expectations regarding quantum advancements, I believe there is a strong likelihood that we will hear more about these stocks in the coming years, as innovations and partnerships fuel what could become a prolonged rally. Quantum computing is undeniably thrilling, but it's crucial for investors to make informed decisions rather than simply choosing stocks based on arbitrary factors like market momentum, catchy ticker symbols, or peer influence. In summary, the trend of quantum computing is here to stay. However, investors should brace themselves for potential volatility. It's essential to focus on the unique attributes of each company and what differentiates them from their competitors before making any investment decisions. In this article, we will explore two notable quantum stocks that deserve your attention as Wall Street continues to analyze every piece of news related to quantum technology. IonQ. IonQ, NASDAQ, IonQ, is often the first choice for those looking to invest in a pure-play quantum company. With a market capitalization of $13 billion, the stock has recently climbed back above $44 per share and may be poised for a long-awaited surge to new heights if favorable news continues to emerge from the industry and the company itself. Many were surprised by how quickly IonQ's stock rebounded after Jensen Huang's comments had initially dampened the quantum market earlier this year. Although IonQ has established itself as a leader in the quantum space, predicting when it will start generating profits remains a challenge as the company works on its commercialization strategy. Currently, I find the company's early global partnerships to be a positive sign. With vast opportunities for future collaborations and a dedicated CEO, Niccolo de Masi, who is committed to preparing the world for quantum technology, I wouldn't bet against IonQ, even if some view its valuation as excessively high and due for a short-term correction. A strategic entry point might be during a market dip. Regardless, IonQ's Tempo quantum systems are impressive, and with a goal of achieving a 2-million physical qubit system by 2030, it wouldn't surprise me if IonQ becomes a significantly larger entity in just over 4 years if management successfully delivers on this ambitious target. Rigetti Computing. Rigetti Computing, NASDAQ, RGTI, has made headlines by skyrocketing over 1,400% in just 1 year, now boasting a market cap of $5.2 billion. Although it remains smaller than IonQ, Rigetti is a company worth monitoring as quantum technology begins to overshadow AI in tech discussions. Recently, Rigetti achieved a significant milestone by reaching a 99.5% fidelity rate for its 2-qubit gates with its modular 36-qubit quantum computer. In layman's terms, Rigetti has tackled a major challenge in quantum computing, high error rates, using a novel approach that could pave the way for future advancements in the field. It's clear why investors are excited about Rigetti. If the company can scale its operations effectively, it may outperform its competitors when it's ready to enter the market. In conclusion, while IonQ seems to be closer to commercialization with a larger market cap and potentially stronger financials, including its remarkable trapped ion qubit technology, it's important not to overlook Rigetti. There is certainly a place for superconducting qubits, and the management's capability to address complex challenges should not be underestimated. The bottom line. Choosing between these two quantum stocks is no easy task as both approach new highs. I believe there's a strong possibility they will move in tandem, as positive developments for one company are likely to bolster the entire sector. Currently, Wall Street appears to favor IonQ slightly more, with prominent analyst David Williams from Benchmark recently setting a price target of $55, indicating a potential 28% increase from current levels. Given this perspective, IonQ may deserve a slight advantage in this competitive landscape. If you've been contemplating your retirement plans, it's time to take action. Retirement planning doesn't have to be daunting. The key is to seek expert advice, and Smart Asset's straightforward quiz simplifies the process of connecting you with a qualified financial advisor. Here's how it works. 1. Answer a few simple questions. Share your goals and preferences. It only takes a few minutes. 2. Get matched with vetted advisors. Our intelligent tool connects you with up to 3 pre-screened advisors who are committed to acting in your best interests. 3. Choose your fit. Review their profiles, schedule an introductory call, or meet in person, and select the advisor who feels right for you. Why wait? Start building the retirement you've always envisioned. Click here to get started today. Thank you for taking the time to read this. We welcome your feedback. Feel free to reach out to the 24/7 Wall Street editorial team. For top quantum computing stocks to invest in now: IonQ, D-Wave, IBM, Microsoft. Quantum computing isn't just the future, it could revolutionize how technology works today. Imagine computers not limited to binary states of zeros and ones, but operating in multiple states at once with qubits. This unique capability enables quantum computers to process vast amounts of data much faster than conventional computers, which could transform industries ranging from pharmaceuticals to logistics. But here's where it gets controversial. Despite their immense potential, quantum computers are still bulky, expensive, and prone to errors, making them far from mainstream right now. Currently, these machines are largely confined to specialized tasks within government labs and research centers. However, as quantum processing units, QPUs, evolve to become smaller, more energy efficient, and better at error correction, the technology is expected to become practical for everyday applications. In fact, market research firm Fortune Business Insights forecasts that the quantum computing market will grow at a staggering compound annual growth rate, CAGR, of 34.8% between 2024 and 2032. This explosive growth signals a prime opportunity for investors looking to get in on the ground floor. Let's dive into 4 stocks poised to benefit from this emerging wave: IonQ, D-Wave Quantum, IBM, and Microsoft. First up are IonQ and D-Wave Quantum, the pure-play pioneers solely focused on quantum technology. They're developing cutting-edge solutions but currently face financial hurdles, as they're not yet profitable and their revenue streams don't fully support their valuations. Still, these companies are promising long-term bets if they successfully scale. IonQ offers multiple quantum systems, including the older Aria, the flagship Forte, and the data-centric Forte Enterprise. Later this year, they plan to launch the Tempo system. A standout feature of IonQ is its proprietary, trapped ion, technology, which helps maintain quantum states for longer durations, known as coherence, and detects errors better than many competitors. The company measures its quantum power in algorithmic qubits (AQ), and expects impressive growth, from 36 AQ in 2024 up to an impressive 1024 AQ by 2028. D-Wave takes a different approach with its quantum annealing technology, optimized for improving business processes like scheduling, supply chain management, and workflow optimization. By identifying the paths that use the least power, it helps companies operate more efficiently, potentially challenging traditional analytics firms. D-Wave designs its own chips and has integrated its Leap quantum computing platform into leading cloud providers. Serving over 100 major clients today, it's well-positioned to attract more business as the quantum market accelerates. Analysts expect IonQ and D-Wave to see revenue growth rates of 88% and 103% CAGR respectively from 2024 to 2027. Although they trade at high multiples of their forecasted 2027 sales, 40x for IonQ and 72x for D-Wave, their long-term growth prospects could justify these valuations. For investors who find pure-play quantum stocks too volatile or speculative, tech giants IBM and Microsoft offer safer gateways into this evolving market. IBM, after divesting its slow-growing infrastructure services, has been focusing on hybrid cloud and artificial intelligence, fueling a revival in growth. Simultaneously, IBM has quietly expanded its quantum computing division, operating over 80 quantum systems worldwide with at least 127 qubits each. These machines collectively run an astounding 3 trillion quantum programs every day. While currently not a major revenue contributor, IBM's earnings per share are projected to grow 16% annually from 2024 to 2027. Trading at roughly 26 times forward earnings with a solid dividend yield of 2.3%, IBM provides a more measured exposure to quantum computing. Microsoft, whose phenomenal growth over the past decade stems from cloud, mobile, and AI dominance, is also aggressively building its quantum capabilities. Through its Azure Quantum platform, it offers quantum tools integrated with its cloud services and partners with quantum startups like Atom Computing and Quantinuum. Microsoft's recent unveiling of the compact Majorana 1 chip, about the size of a desktop CPU, highlights its innovation. Analysts predict its earnings per share will grow 14% annually from fiscal 2025 through 2028. Though Microsoft stock trades at around 33 times forward earnings and offers a modest 0.7% yield, it remains a balanced option for those wanting to tap into quantum computing alongside established cloud and AI businesses. But here's the question for you: does investing in quantum computing stocks represent a tremendous opportunity, or is it simply a speculative tech craze inflated by hype? Are pure plays like IonQ and D-Wave worth the risk compared to safer bets like IBM and Microsoft? The debate is far from settled, and your thoughts could shed new light on this fascinating frontier. Feel free to share your take in the comments below. Leo Sun holds no positions in any stocks mentioned. The Motley Fool owns shares of and recommends IBM and Microsoft. The Motley Fool also recommends long January 2026 $395 calls and short January 2026 $405 calls on Microsoft. For more details, see the Motley Fool's disclosure policy.